Hey guys, is that a right stock to invest? How can we check in less than 5 minutes? Let us find out right now. Hey guys, this is Naveen. Once the famous investor Mr. Warren Buffett said, there are 2 rules to make money in the stock market. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Let us find out how to avoid losing money in the stock market. Friends, many times we buy stocks based on somebody's recommendation. Either we don't know what to check or we don't have enough time to check through the financial information of the company. There can be a big time gap since when it was recommended, or it is not clear from the article when it is recommended to buy. Sometimes it can be a situation where big investors want to reduce their stake. They are attracting retail investors through these kind of recommendations. Many times we buy stocks when the market is too hot. We see that market is keep on running, our heart burns since we did not buy enough or not bought anything yet. Hastily, we rush to buy some stocks based on the name or somebody's recommendation or what is trending in the news. Many times we buy stocks when the stocks starts to fall without understanding why it is falling. We always wanted to buy that stock, but it was very expensive. Now that it has started falling, it is time to buy. We go and buy, but how sure are we that it will continue to perform well in the coming days? How sure are we that the stock is not going down permanently due to the issues with the company? Even if the market crashes tomorrow, the stock that we bought should be the one of the last one to crash and should be one of the first few to recover upon market rebound. With the limited capital to invest, our first and foremost aim should be to protect capital by not buying the wrong stock. Then to make the profit without compromising on return. We want decent quarter on quarter and hence year on year return. So we need to be very certain that we are investing only in right stocks. Most of us are working professionals. We are all seriously short of time to research. How can we outsmart experienced investors out there in the market? Let me explain the fastest and easiest way to check if a given stock is a right stock to invest or not. It is so easy that you just need 5 minutes to glance if the company you intend to invest is the right company or not. This way, we are going to eliminate the biggest risk out of our way. In order to do that, we need to briefly understand what to look for in any given stock. Don't be frightened. It is not complicated at all. You just have to know that there is something you need to check. A software tool will help you to do most of the work. The foremost important parameters for any given companies are these. Number 1, revenue growth. Number 2, net profit growth. Number 3, earnings per share growth. Number 4 is the profit margin. These parameters are so important that you should never ever forget to check them. No need to buy at them. I am going to show you a simple way to check these parameters for free of cost in a very short period of time. We know that there are so many other parameters to take into consideration for a given stock, but guys, these 4 are top of the list. If these fails, you don't need to look into any other parameters. This is bare minimum requirement. Let me explain each of them briefly. Number 1, revenue. How much of goods and services companies sold over a period of time is called revenue. In other words, how much money company received in total without deducting any form of expense is called revenue. Let me show you the revenues of some of the companies in different sectors. Infosys. For the past 10 years, the chart looks like this. Don't worry about how to get it. Later I am going to show you the simplest way to get it readily plotted for you to see. The revenue of Infosys Technologies over the past 10 years, as we see, it is constantly growing. Avanti Feeds, see the growth. Now you can understand why this stock is booming. Suzlon, looking at this chart, you can tell how predictable is this stock. Sun Pharma, getting stagnant or even started going down. ONGC, a clear downturn due to various issues in the oil and gas industries. We understood what is revenue and looked at revenues of few companies. Now let us look at second most important parameter, net profit. From the revenue explained in previous slides, if we subtract all kind of expenses such as operating cost, tax, interest, distribution expenses, material expenses, and any other kind of expenses that occur to the business, what is left is called as net profit. We don't need to calculate this manually. The software tool I am going to show you soon will get you this information in fraction of minutes. We all know that businesses depends on profit and growth by profits. Let me show you the performance of some of the companies we discussed earlier. Infosys, a steady growth over a period of time. Avanti Feeds, profit is exploding exponentially. Suzlon, the chart speaks for itself. Sun Pharma, is it showing a downturn? ONGC, it was in a clear downturn for past few years. Now, is there a sign of recovery? We understood the net profit now. Let me explain the third most important parameter to look into. If we divide the net profit to the total number of common shares issued in the market, is called as earnings per share, or in short EPS. This is a very important parameter. The value of the stock you are going to buy is derived from EPS. If this is growing, the value of the stock you are going to buy or you are holding is improving. With that in mind, let us check performances of some of the companies for the EPS. EPS of Infosys, Avanti Feeds, Suzlon, Sun Pharma, and ONGC. All these charts clearly shows how was the companies performing in the past and where they are heading to in the future. That wraps earnings per share. Now let us look at last and the fourth most important parameter, profit margin. Profit margin is percentage of revenue that remained as profit is called profit margin. Higher the profit margin, better the company performance will be. Higher the profit margin, lesser the company need to sell to be profitable or need less efforts to make money. In other words, if profit margin is higher, means company is placed better in the market, like monopolistic. Profit margin may not grow over the period of time. It should be stable or improving for the companies to be sustainable. If it is falling, means company is facing competition. Company need to sell more to sustain the earning growth. Now Let us look at some of the companies. Profit margin of Infosys looks like it is sustaining over the years, right? Avanti Feeds keep on growing. Suzlon, profit margin of Sun Pharma looks like it is losing steam over the years. ONGC, is it deteriorating? The charts speaks for itself. We need to look into all the 4 parameters and decide if the stock is a quality stock or not. We looked at all the 4 parameters, we visualized them. Now it is time to ask ourselves, is this the right company to invest? We need to look at quarterly charts and yearly charts. Quarterly charts shows early signs of improvements or slowdown and helps us to decide to buy or sell. In short, revenue should be growing, net profit should be growing, earnings per share should be growing year on year and quarter on quarter. Profit margin should be stable or growing. All these parameters, higher the value, better the company performances will be. We need to ask ourselves, what am I buying into? After looking at these charts, we need to ask, is the business growing year on year? Is the business growing quarter on quarter? Is the company predictable and dependable? Can the company protect our investment? Can this company going to help us to retire from work peacefully? Friends, with this information in mind, let us find out how to get these charts in a fraction of a minute, painlessly and free of cost. There are multiple ways to check these parameters quickly. Let me demonstrate the fastest way of checking every time. In order to do this, we need to set up one time, which is again a very quick step. First, copy the link of a model Microsoft Excel file from the description below. Open an internet browser, paste the link and click on the download button. Note down the location of the downloaded file. Next step, go to www.screener.in. Click on the login button. Register an account. It is a very quick process. Just need to enter email ID and confirm email ID and a password. Once registered, you are automatically logged into the account. Now go to www.screener.in/excel. Upload the file downloaded just before. Now you are ready. The above steps are only one-time requirement. We don't need to do this again and again. Now you can go and search for the company you would like to see this information. For example, Wakranji Limited. If you scroll through this page, you can see a lot of information. Don't be overwhelmed. Just click on View Consolidated at any location on the page. Now go to the top right corner of the page and download the Excel file. Once downloaded, you can see there are a lot of information again in this page. You just look at these charts and visualize how this company is performing. Sales, which is nothing but revenue, how the growth over year on year. The bar in the red color are our expectation, which is 20% year on year. You can adjust that reference and understand how fast the company is growing. In this case, 45% year on year. Now look at the net profit. Again, my reference was about 20% year on year. You can adjust it to whatever the number you would like to adjust, let us say 40% or 37%. Yes, this company is growing about 37% year on year. Look at the EPS. You can adjust the numbers again, about 35% for this company. Yes, and lastly, the operating margin. You can see initially first 2 years the operating margin was very good, and later on it has dropped, and now it is stabilizing to about 25% year on year. There are many other charts in this Excel file. Do not worry about these charts for now. I will explain some of these in the next video. At this stage, you just need to understand how to check the 4 most basic information before you buy anything. In this Excel sheet, there are 6 sheets. Profit and loss, which is a yearly chart. Quarters, which is quarterly chart. You can again see the same information. Sales or revenue, net profit, operating margin. Balance sheet is basically showing return on equity and return on capital employed. Again, this is just for visualization at this stage. We can discuss about it in the upcoming videos. These two are again a very important parameter. Cash flow, how much the company is holding the cash at the end of the year. We can visualize it clearly here in this chart. And customization is basically the information on how to use this Excel sheet, and data sheet is a source of information. You should never ever change that sheet. So focus on the 4 parameters in this Excel sheet: sales, net profit, earnings per share, and profit margin. Look at it year on year, quarter on quarter, and see how the trend is progressing. From there, we can decide whether this company is going in a positive direction or negative direction. You can check this information for any company in BSE and NSE. Just type the company name in the search bar, download the Excel sheet. So as we can see here, in less than a minute, we are readily having all the necessary charts for us to visualize and understand how the company is performing. As we see here, Reliance Communication, how the revenue is growing, and net profit and EPS are growing overall year on year and quarter on quarter. Friends, thanks for watching. Hope this video helps in your investing journey. Subscribe, comment and share, and encourage to come up with more such videos. Watch out this channel for more such videos. Thank you.